Welcome to this edition of Talk with Trent. Our guest today is Paul Simons Jr. Paul's an attorney with the Hull Barrett Law Firm located at 111 Park Avenue Southwest in Aiken. Their telephone number is 648-4213. Hi, Paul. Why don't you give us a little background info about you and the types of work you do?
Sure. I'm an attorney here in Aiken, South Carolina. The main type of work we do, we call it transactional work, which basically means we don't do much work in the courtroom. And that involves wills, trusts, estates, any type of planning needs that our clients have. We'll also do corporate work, whether that be business formations, and or any other type of problem that a business could face during the course of its lifetime. The other thing we will do is real estate closings, residential real estate and commercial, and any type of real estate issue that comes up, we handle those as well.
Great, thanks. Well, today we're going to talk about the different kinds of business entities, such as a sole proprietorship, a partnership, a corporation, and the LLC. Each has its own pluses and minuses, so let's begin. Let's talk about the sole proprietorship.
The sole proprietorship, Trent, is the default classification if you start a business. So for example, if I were to start up a business and didn't form an LLC, a corporation, or a partnership, and it's just myself, you're going to be considered a sole proprietorship. And from a legal standpoint, that can be problematic because it does expose the business owner to personal liability. Personal liability not only if there is a lawsuit that's filed against them, but also any debts that the company has. The owner is responsible for those debts.
Right, good point. And also from a tax standpoint, you need to remember that the operations of the proprietorship are reported on the individual's tax return. So losses are deducted against any other income. Income is reported on the individual tax return too, and all of the profit is subject to the self-employment tax, which is 15.3%. All right, let's talk about partnerships.
Partnerships, it's very similar to a sole proprietorship. There are no formal requirements that need to be met. Some people will execute a partnership agreement, but you don't have to file anything with the Secretary of State for it to be valid. It just has to be two or more persons carrying on with a common business venture. That's it. But again, like the sole proprietorship, it does have problems with liability. The debts of the business are the responsibility of the partners. And from a legal standpoint, that would be one of the biggest downsides. Again, one of the benefits, though, would be it's easy to set up. Don't have anything formal.
Yeah. And similar to the proprietorship, the partnership is a flow-through entity. So the operations of partnership are reported on the individual's income tax return. One of the unique benefits of the partnership is that it allows what are called disproportionate distributions. So if there is a business reason for allocating more of the loss or the profits to one partner over the other, it's allowed in the partnership form, but in almost no other form is that type of a disproportionate distribution allowed. All right, let's talk about corporations.
Corporation this corporation's been around for over 200 years.
Long time.
And the reason that they were formed, it was to allow the shareholders to be immune from liability of the corporation. That means if the corporation were to be sued and have a big judgment against them, the individual shareholders, they didn't have to come up with the money. Same with the debts of the corporation. The individual shareholders are not responsible for payment of those debts. It is, one of the downsides is it is somewhat costly. It is the costliest type of entity to form. You have to prepare a lot of legal documents, file with the Secretary of State. The formation phase is difficult, and then the everyday keeping up with the formalities of the corporation has a lot more formalities involved. And if you want to enjoy the liability protection, you do have to abide by the formalities inherent in any corporation.
That's probably the term that a lot of us are familiar with called piercing the corporate veil.
Correct. That is, if the corporate veil has been pierced, that allows the individual shareholders to be liable. So if you do disregard the corporate form, they can get at you. It's difficult, but as long as you're abiding by the corporate form and doing everything that's supposed to be done, you do have, it's very
treated as a business rather than as a proprietorship.
correct.
And there are two types of corporations. There's what's called a C corporation, is a regular corporation, and an S corporation, which is most often the one that small business owners choose. The difference from a tax standpoint is the C corporation does have a tax liability for its operations rather than the owners. And an S corporation is a pass-through entity where the owners report the operations on their individual income tax return and either deduct the losses there or pay taxes on the income. The one benefit from a tax standpoint of the S corporation is that the earnings of the S corporation are not subject to self-employment tax. Only the amount of the wages that are paid to the owners on the W-2 are subject to that FICA tax. So the last type of entity is a limited liability company.
Save the best for last.
There you go.
At least for a small business owner, limited liability company is generally the type of entity we recommend someone forming. Now granted, there's always going to be an exception, but a limited liability company, there was an act in South Carolina called the Limited Liability Company Act, and it basically, the purpose of that was to provide a small business owner with the same liability protections as a corporation, but without the need to have to go through all the formal steps to get that liability protection. It ends up being, I'd say, around $500 to get one of those formed, and that's with attorney's fees and everything, putting together an operating agreement and getting an EIN number.
Right.
But the beauty of it is its flexibility.
Sure.
It's the ideal type of entity for the small business owner generally.
Right. And from a tax standpoint, it can be taxed in a variety of ways. If there's just one owner, it can be taxed as a sole proprietorship. That's what the IRS actually calls a disregarded entity, meaning that it doesn't require a separate income tax return for the business. Or it can be taxed as a partnership if there are multiple owners of the LLC. Or it could be taxed as a corporation if you make that election. And generally that's the route most LLCs will go. They'll choose to be taxed as an S corporation because of that pass-through entity provision of the tax code. All right, great points, Paul. Appreciate very much you being with us today. I know our viewers will be helped by your advice. What's the best way for them to get in touch with you?
They can either call the main office at Hull Barrett in Aiken. That number is 803-648-4213. Other great way, we have a website, www.hullbarrett, HULLBARRETT.com. Excuse me, one T. .com. And it has a link to my email address, and they can just send me an email. That's another good way.
Very good. All right, well, we hope you enjoy this video today. Please check my website, which is www.aiken-cpa.com for additional videos. And check my Facebook page, Arnold Advisors LLC, for quick tips on tax and business matters. Thanks very much.